So this is where the excitement starts, guys. Rule number one of our strategy. Rule number one of the bullseye strategy. But before we get onto this, firstly, have you got your pen? Have you got your paper? Have you got your trading view open? So remember to go into the free trading view. That's all you need. Don't pay for any subscription. For the bullseye strategy, everything that you need is within the free plan. So follow along with me, guys, with your pen, with your paper. But before we move on to this step, seriously, you need to understand what your time frame analysis is. Go back from the last video, make sure that you've drilled home. How long can you be at the chart? What kind of time frame are you going to be at the chart? What's your higher time frame bias? What's your trading time frame bias? That's going to not skew your mind as far as time frames are concerned. So ask yourself that question, guys, and I'm here to help. So if you don't know that, or if you don't understand that, or if you're new to trading and you don't understand why it's important to have time frame analysis, reach out, guys, because this is going to be a community thing and not just me helping you out. We've got lots of smart people within this community that are going to help each other out. So that's the positive thing about this, guys, is we're in it together and we're going to build something together, and hopefully we're going to create success together. I'm not bothered about having a huge community, guys. I'd rather have a small community of dedicated people that are willing to learn, understand risk management, and understand exactly what they're getting into. Because anybody that keeps saying, and I keep seeing it on all the other crypto channels, it's a 2-year hold, it's a 3-year hold, it's a 4-year hold. Absolute crap, guys. You're going to get wrecked if that happens. So I'd rather have a small community on this channel of people that have got common sense, people that are like-minded and understand what risk is. So this is the first one, guys. This is the first part of the strategy. You can't move on until you found out your time frame analysis. If you can't find out your time frame analysis, give me a shout. We'll work it out. This is going to be the 200 daily moving average, and it's all to do with identifying the trend. And we've talked about this in crypto class before, guys. If you're trending like this, what is that? You all know now that is a bullish trend. So that's a bullish trend. And what's this, guys? Resistance, resistance. What happens in a bullish trend? Resistance gets broken through after a pullback and then becomes support. So let me show you part of what we expect to do in the strategy. And this is going to be in simple terms, guys. I'm not going to delve into it too deep. We're understanding whether we're trending higher or lower, whether we're putting in higher highs and higher lows, or whether we're putting in lower lows and lower highs. That's going to help us identify whether we're bullish or bearish. Now, the aim of the game of this strategy, you've got a push, you've got resistance. When you're at resistance and you're in a bullish trend, you're waiting for a pullback. If you're waiting for a pullback, then you're waiting for a break, for a continuation to at least previously test the previous high. But if it is a continuation, to break the previous high, continue higher. So what would we be looking to take on this? If you're putting in higher highs and higher lows, we're waiting for a pullback. You're waiting to take advantage of a pullback. You're waiting for a break because you're expecting a continuation because we know where the trend is. So you're waiting for a break and then you're trying in this one. It's not going to be a greedy strategy. You're trying for the previous swing high. Now, why are we going to be trying for the previous swing high and we're not going to be looking for Fibonacci extensions, guys? It's because this is a higher probability move. We're going to have a minimum of risk to reward before you can take this. So that's another rule that you're going to build in that's going to give you a higher probability move. But it's also going to help you understand what your risk to reward can be because we've got a maximum risk to reward built into this strategy. But that's the aim of the game, guys. You're bullish, you're putting in higher highs, you're coming back, you're putting in higher lows. When you're putting in higher lows, we're waiting for the break. Once we've got the break, we're trying for the previous high. Once we've hit the previous high, we've got to make sure that our risk to reward is significant, and then we'll continue and rinse and repeat and rinse and repeat. So basically, guys, this is a trading strategy. I talk about trading, I talk about investment. My investment strategy is accumulating at low levels of support at a long period of time, and then running and taking profits from a bull market, guys. So I'm going to be taking profits from my investments in a bull market, but I'm also going to be capitalizing and then adding to my investments from trading, which is going to be in, out, short term. So this is going to be the trading strategy that we're going to be talking about. And I've probably gone a little bit too much in this video for what I'm actually talking about as far as step one's concerned. So basically, we're identifying the trend. If we're in a bullish trend, we're waiting for a pullback, you're waiting for a break. If you're waiting for a break, you need a minimum of risk to reward of 2 to 1. We'll talk about that in one of the next videos. But it's all about the identification process. So we're adding in 200 daily moving average. Now, this is going to be the simple way of understanding how we're going to identify the trend. But I just wanted to show you what a trend looked like and how we would be capitalizing out of that trend, not being greedy and looking for the continuation, but for the previous high. When you see a weak trend, guys, the reason for this is when you see a weak trend, what you'll see is a double top. When you see a double top, that's showing that the bulls are struggling to break the previous swing high. And if they're struggling to break the previous swing high, it's likely to get a pullback. Now, if you get that double top and the trend weakens, what this strategy allows for is a test of the previous high. If that test of the previous high is a rejection, that is a profit. That's taking profits, guys. So what we're going to do is we're going to add in the 200 moving average. So we're going to add in the SMA, that stands for simple moving average or moving average simple. So we're going to add the moving average simple, bam. What it's going to look like is this. See this little blue line. Now, what is a moving average? Moving average, if you think of it as a line, which is averaged out over a period of whatever days. So this is the daily chart, and this is the 9-period moving average, if you can see that. That's the 9-period moving average. So that is 9 candles, 9 days of candles averaged out. Now, the 200, we use the 200 because the 200 is the king. If we're above the 200, then we're bullish. If we're below the 200, bearish. So it's all well and good saying higher highs, higher lows, higher high, higher lows. Simplify it above the 200 moving average, and this is going to be rule 1. So we're clicking on this, and then we're clicking on the settings. This is the important thing. So you're clicking on the settings. What I like to do is make it green. I like to make it thicker. And then the inputs, guys, we're 9-period. We're changing that to a 200 period. So get yourself on your chart. Go and do exactly the same thing. Bring up the smooth moving average, a simple moving average, sorry. Then put in the inputs 200, add 200, and then make it green. Make it whatever color you want, to be honest with you. So that is the first step, guys. Are we bullish? Are we bearish? You're on the trading time frame. If the trading time frame is the daily, you're looking, we're bullish. We're above the 200 moving average. Then we go into, sorry, that was the higher bias time frame. Then you're going into the trading time frame, and you're looking, are you bullish? Are you bearish? See, when you look in the trading time frame, guys, you can see the sideways action, there's choppiness. We can tell in the higher time frame that we've got a double top here. We've got a lower low, lower close candle here. It's looking like we're going to be rejected and come back down to 92,000. So that's not a trade, but we're going to go through some trade examples very soon. And let me tell you guys, if you take 4 trades, if you take 5 trades, or if you're looking to take 4 or 5 trades, what's going to happen, and you need to get used to this as well, what's going to happen is time 1, you're going to get to step 3, step 4, you're not going to get to step 5, trade's not there. Second trade, step 3, step 4, step not going to get there. And then finally on trade 4 or trade 5, you're going to get your rule set up, and that's going to be a higher probability move. It's going to give you higher conviction. But more importantly, guys, this is the most important rule, is when you're doing your trade, you need to be logging it. You need to log it in a journal. You need to log it on a spreadsheet. But if you're taking an if then based rule system, what that's going to allow you to do is collect data, which is based on the same trade. And then that's going to allow you to understand where the profitability lies. If there's areas within your strategy where you think that's not working well, that's not working well, I've got a 70% profitability, but there could be improvements. You can add things in like additional filters. An additional filter is something like an RSI. You can look for an RSI divergence. You can build that into your strategy. But before you can build in any filters within your strategy, you need that data. So if you haven't got the data, then you can't amend the strategy. If you haven't got the data as well, guys, it won't work. I promise you guys, it won't work. Psychology will get the better of you, and you'll interpret your strategy different. If you interpret your strategy different, you're just going to want to take everything, because you're going to interpret it to try and take everything. So at the end of this, guys, it's going to be strict rules. And if we can't move on from the previous one, then you look for another trade. Look to fight another day, guys. Most of the time, you're not going to take them. When you do take them, it's going to be high probability. It's going to help you analyze exactly how profitable it is over a period of time. And then whether you're going to be consistently profitable. Because if you're consistently profitable, guys, that's your edge in the market. That's your money printer machine. That's your passive income. That's potentially you slowing down from your day job. It's potentially pulling you out of part of the rat race. So it is all about consistency, guys. It's all about discipline. So the 200 moving average, guys, that's the 200 moving average. We're identifying the trend. The reason for this is, are we bullish? Are we bearish? If we're bullish, we're looking for a pullback, and then we're looking for an extension, or not an extension, a pullback, a breakout, and a test of the previous swing high. If we're bearish, flipping it in reverse, we'd be below the 200 moving average, and then we'd be looking for a swing low, a pullback, a higher low, and then we'd be looking for a continuation to the downside, testing the previous lower low. So that's the bearish and that's the bullish. It works both ways, guys. And that's the 200 daily moving average, which is your first step. Are we above? Are we below?